Today I'm in North Shore Open Space Park here in Miami Beach, and it's been a long time since I shot a video here. And the reason I came here today is because they've been totally renovating this park and wanted to come check it out. Haven't been here since some of the renovations. So in the meantime, you can wave to the rush hour traffic behind me. Now, one of the biggest looming issues with homeownership today is homeowners insurance, guys. And the reason it's such a big issue is because how much the cost of it has been rising, but also the fact is, if you have a mortgage on a property, you have to have homeowners insurance. There's no two ways about it. If you don't have homeowners insurance and you have a mortgage, the mortgage lender will implement a forced policy on your behalf that will likely cost far more than what your current policy costs, and it will mainly cover their losses in case of an event and not yours. So you really don't want this to be the case. That's like kind of last resort unless no other insurance company will cover you. But I'll bet you didn't know that Florida is actually not the worst place when it comes to homeowners insurance. In fact, it is in Oklahoma. And I had no idea it was there either. I would never have guessed that Oklahoma is where people spend the most out of all of their yearly income on homeowners insurance. It turns out in Oklahoma, people on average pay $3,659 per year, and that's about $305 per month, or about 5.3% of most Oklahoma people's annual income. So there's a chart, I'll have it linked in the description if you guys want to check it out, from Bankrate, that kind of has a breakdown of all 50 states of how much people pay for insurance. But Oklahoma is at the top of the list when it comes to the percentage of people's income that they need to spend on insurance. You see, they have like half the park done here, and then this half they're still working on. So and explore the half that's done. Now, many people probably don't realize this, especially first-time home buyers, that your homeowner's insurance premium is likely going to be your second largest expense with owning your home besides paying your mortgage. And unfortunately, this is one of those expenses that gets overlooked when people are looking at homes and looking at buying something. And the easiest way to prevent having any trouble with this is to just get a homeowner's insurance quote before getting too deep into the contract. You know, you make an offer on the house, you get 7 to 10 days due diligence period where you can back out usually for just about any reason. If you find that the homeowner's insurance premiums are too expensive, that could be a great reason to back out of your purchase. So something to keep in mind. Playground area here. This whole sidewalk I'm walking on is brand new. New exercise equipment all over the place. Looks like the layout of the park hasn't really changed. They just upgraded the appearance of it. Now, one of the biggest complaints I see from people in the comments is that they've had homeowners insurance for the past couple of decades, never had a claim, but yet they're seeing their premiums go up. Well, why is that, guys? Well, the thing is, they don't care if you've never made a claim. So you might as well make a claim if you need to, first of all. But a lot of people then are afraid of getting dropped, that if they make a claim, that they're gonna drop them from the policy or raise their premium even more, which is a legitimate concern. But the other thing is that your homeowner's insurance premium can go up every year, even if you've never made a claim, simply because of the fact that they usually have inflation guards with the policy. So when inflation goes up, your coverage limits also go up with inflation, but naturally you end up paying more for those higher coverage limits. So that's one thing that's happening right now. And then of course here in Florida, we've covered time and time again the major insurance issues we're having down here as it pertains to so many insurance companies going insolvent here. In fact, there's been 7 in the past 13, 14 months go insolvent. That's almost 1 every 2 months. And on top of that, we obviously get hit with hurricanes here, and last year we got hit with a big one, Hurricane Ian. So the biggest issue with securing a homeowner's insurance policy here in Florida now is, number one, can you even get coverage? Because in a lot of cases, people can't get coverage because their roof is too old, they need to replace the roof before an insurance company will cover them, or they might require you to also have a flood insurance policy. If you have citizens, that's a new requirement with them where you gotta have flood insurance no matter where your home's located. Doesn't matter if it's in a floodplain or not. So that pretty much sucks. But look at this, guys. The average homeowner's insurance premium from 2022 to 2023 jumped 20%. And this is not just here in Florida. We might be one of the more extreme example cases of this happening, of just how much things have gone up and how bad the insurance problem has gotten here. But by no means are we alone. It's not happening only here. Plus, here in Florida, people need to get wind insurance if they want to be covered from a hurricane, for example, and just the wind insurance alone on average can run you an extra $3,600 a year just for that. But California is dealing with their fair share of wildfires. A few of you have told me that the wildfire insurance is getting too out of control in California and they're leaving because of that, which is also pretty similar to what's going on here in Florida when it comes to our premiums. But this is the reality, guys. If you buy a home in a disaster-prone area, your homeowner's insurance is going to be considerably more than somebody who buys in a less disaster-prone area. But not only that, but the amount that you're going to have to pay in insurance reduces how much you can actually afford to pay for a home because it's such a large chunk of your monthly payment. Like, say for example, you wanted to buy a $350,000 house and put 20% down. You get a 6.5% mortgage rate. Well, just your mortgage payment with your principal and interest is going to be $1,769 per month, and that does not include your homeowner's insurance premium. So this is something a lot of people forget when they use the mortgage calculator. And like if you go on Zillow, for example, use their mortgage calculator, they include insurance, but I find most of the time that's not very accurate at all, guys, and neither is the property taxes. That's another thing people don't take into consideration, is the property taxes. And here in Florida, just to cover a $250,000 dwelling, you're looking at about an extra $2,000 a year, or an extra $165 a month, just for that, just for the replacement cost of a $250K property, which is pretty low today by Florida standards. And when you contrast that by looking at a place like Delaware, it's so much cheaper at only $57 a month. So you're talking a third of the cost of what it costs to insure a similar home here in Florida. But there are things that you can do to lower your premiums. Like here in Florida, for example, hurricane shutters or hurricane-proof windows. A lot of times that'll give you a deduction on your insurance. You can also get discounts for fireproofing, different things like that if you live in a fire-prone area. Or if you're tired of the madness, you can just give up and rent forever, like many people are choosing to do. In fact, in a recent survey here in the US, 66% of renters are saying that homeownership is a hopeless endeavor now and it's completely out of reach. And funny enough, we covered a pretty similar story a couple weeks back out of Australia, and the statistics were alarmingly the same. You know, you had 2/3 of renters basically giving up on ever being able to buy a home. And the most troubling part is, instead of keeping the goal in mind of buying a home, they're just blowing the money instead. So they're truly giving up just by blowing all their money. But I do want to just point something out here, because they say that the median home price has gone from $329,000 in January 2020 to $476,000 as of April 2023. And that's according to the US Census Bureau data. And I want to point out that all of this housing market data is so out of whack, guys. You have the US Census Bureau saying that $476K is the median home price right now, but if you look at National Association of Realtors, they say it's $375K. You're talking a $100,000 difference. Redfin is saying it's $400K, and Case-Shiller is saying it's only $293K. And these are all reputable places that collect real estate data, and they should all be accurate, but yet they're all so far apart. So what's up with that? I've kind of brought this up before, but it's crazy how much that these numbers vary with no explanation. Now, 51% of the renters that they surveyed said that owning a home is very important. It's an important financial milestone in life, but they actually have even higher priorities over owning a home now, since it's become so expensive. And I have to at least respect some of their other goals, because some of them are saying 71% of renters are saying that being debt-free is their number one goal. That's a pretty noble goal, to become debt-free. I think that's a really good starting place, and just by becoming debt-free, they may actually change their mind and be able to become homeowners after getting out of debt. So that could be good. I'm gonna take you guys out to the beach here in just a minute. Now, 66% of the people surveyed said that having a comfortable retirement is their top priority over buying a home. And some people would argue that if you want to have a comfortable retirement, owning a home that's paid off without a mortgage is essential. And I think there might be some truth to that, at least from the stability aspect in retirement, because if you're renting and you're getting up there in age and the landlord can just kick you out anytime or raise the rent to crazy levels, and next thing you know, you have nowhere to live and you're on a fixed income. But on the same token, homeowners that have paid off homes are in trouble these days too, because of what we just talked about. They're not immune to these insurance increases that we've been seeing, and it's affecting the elderly, disproportionately because they have fixed income. So it is really taking a toll on their monthly budget, having these higher insurance premiums, and combine that with higher property taxes, higher costs of everything when it comes to repairs in the house. It's not cheap. Here's a surprising data point from this too. 59% of renters said that rather than buy a home, they'd rather buy a car. That's a lot of people that would rather buy a car. The biggest surprise to me was that many of them don't even own a car to begin with. And then you had a third of all respondents to this survey saying that they would just rather spend their money elsewhere and they're never interested in owning a home, that they're done. Now, here's the top reasons why all these people said that they weren't interested in owning a home. 78% said they just can't afford it. So right away, many of them just aren't interested. They don't have the money. 72% say that because they don't have the down payment, which is practically the same thing. Not having the down payment and not being able to afford to buy are one and the same, really. 71% said because of high interest rates. But that just goes to show you, once again, guys, the biggest problem with people, they focus on the wrong thing. High interest rates is why they're not looking to buy. They didn't say that prices are too high. Now, I know that affordability directly correlates to that, but no one just came out and flat out said that home prices are too high, so they think it's not worth it or anything like that. And one of the most concerning data points from this survey is that 25% of all the renters they talk to are spending 50% or more of their income just on rent. And that is definitely not sustainable. It's going to be really hard to achieve any of their financial goals if that's the case, because too much money is going towards rent, guys, because the same advice applies whether you're paying for a mortgage or rent, that no more than 30% of your income should be going towards your housing payments. But then on the flip side, you have a segment of people who are desperate to buy a home, so much so that 31% say they would sell their plasma, or 29% say that they would skip meals if it meant that they could afford to buy a home. Now, that is extreme dedication to becoming a homeowner. The Redfin CEO, Glenn Kelman, he came out this week, he's pretty vocal in the media, and said that Redfin is much better positioned to weather this housing downturn now that they've basically trimmed the fat. They've learned a lot from their mistakes when it comes to the housing market, and as soon as things start picking up, that they're going to be in a much better position to profit again. He said that there's so many people that want to move to a more affordable part of the country. Here's where I think that people that earn a lot of money are completely detached from reality, guys, okay? He says that if mortgage rates ease by the late part of the year without causing a recession, that's already delusional talk right there. He thinks that's the big break that we need to see in the housing market, is interest rates coming back down by the end of the year and no recession, guys. Well, it's not gonna be no recession, okay? I don't know how people that are this high up on the corporate ladder can think that there isn't gonna be a recession. Every single economic indicator that we have that is pointing to a recession right now. The biggest one that the Fed concurs with is that the yield curve inversion is out of whack. So that is a predictor of a recession every single time in history. In fact, I'll throw up a chart for you guys. Every time you see that gray line here on the Fred chart, you can see that right before that gray line was a yield curve inversion. And where are we at right now? One of the biggest ones in history, as you can see here. So what's coming next? A big gray line. There's no two ways about it. It's coming. And the other thing is, doesn't Glenn look at the earnings of Redfin? Doesn't he look at the state of the company right now? In fact, Redfin's projected earnings for the second quarter of 2023 are between 268 and 281 million, and that's down by more than 20% from just a year ago. So this is a real estate company that's in the business of selling real estate and all things related to real estate, and their revenue is off 20% from where it was a year ago, but yet he's saying there's no recession, guys. I mean, the only thing I can even think of when I hear stuff like this is they have to come out and say these things because it's the only way that maybe business will pick up and get better. That's why you see people still going out and having the FOMO and getting into multiple offer situations, because they hear things like this and they think that they're never going to have a chance to own a home again, which is just not true. Now, here's an interesting real estate story for you. Nordstrom's is the latest retailer to say that we're pulling out of downtown San Francisco because of how bad the drugs and the crime situation is getting down there. And I've been to San Francisco several times, guys, so I'm very familiar with the city. It's not a very big city, so it's easy to see the whole place in a relatively short period of time, and I've done that. I've been all around the city, and downtown San Francisco is not a nice place, okay? And it's to the point where these retailers are literally scared for their employees' well-being, because they could be held up at a robbery at any moment. They could be subject to a stabbing. That's why Whole Foods closed down recently. And when you combine that with the slower business because of remote work, you know, San Francisco is the tech hub of America, basically. The downtown is dead when it comes to foot traffic and people patronizing the businesses there, which is a big problem for businesses. And it's not just Nordstrom's and Whole Foods that have pulled out. You have H&M, they've pulled out. You have Marshall's, they're gone. Gap, Banana Republic, Anthropologie, Office Depot, Home Depot. In fact, it's being reported right now that they're seeing the highest level of organized retail crime that they've ever seen over there. And it's so crazy that they're not doing anything about this to make things better. It's like, how many businesses need to leave the area for them to really start cracking down and getting tough on these people? When you can walk into a Walgreens and steal $900 worth of stuff and have nothing happen to you, that's not a sustainable business model. And no retailers are going to put up with this in the long term, I don't think. I mean, Elon Musk, he's in charge of Twitter, and in case you didn't know, Twitter's in downtown San Francisco, and he's even talking about on Twitter how bad it is down there. He's saying how so many stores have shuttered in downtown that it's now feeling post-apocalyptic. So the guy's there, he's always frequenting the area, and he's seeing this firsthand. I'm gonna spend part of my summer in the Bay Area this year, guys. I love California when it comes to the weather, at least, and the activities and that fresh mountain air and hiking and all of that stuff. But I'll be just passing right through San Francisco over the Golden Gate Bridge, over by Sausalito and Tiburon and all that. I ain't gonna be dealing with San Francisco because it sounds like an absolute nightmare right now. But I actually love the Bay Area because for me, it is the perfect summer weather. I love when every single day is 70 degrees during the day or 65, and nighttime is, you know, in the low 50s. I love that, guys. It's close to the hiking, it's close to the beach, it's close to wine country, it's close to everything that I love about the area. And you don't even have to go to San Francisco even one time to enjoy all those amenities. It's really sad because it is a beautiful city. I mean, it absolutely is, with all the hills, the architecture, how so many things are walkable over there. I think San Francisco could be one of the greatest cities in the world if they would just clean up their act. But unfortunately, until that happens, you're probably gonna see more of this. And by the way, anybody who made it to the end of this video, when you're watching this, Sunday, May 7th is my birthday. So if you'd like to wish me a happy birthday, I would love that. Thank you so much. And I'm actually gonna be over in Venice, Florida for the weekend, and I'm gonna shoot some videos over there for you guys. So just a heads up that next week, there's going to be some new videos in some new areas that we've never been to before, so that'll be pretty cool. And we'll finally probably see some affordable homes for sale. If you guys enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video. And if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.